watching The Money Show with me, Kavita Thaplial, and let's talk about your financial portfolios now, because there are plethora of funds available in the market, and to invest your hard-earned money in, you should know how to assess which is the right fund for your portfolio. So what are the criteria that one should look at to help you navigate through this maze? We have on board Harshvardhan Rungta, CFP Rungta Securities, and also do not forget to send us your portfolio queries on our WhatsApp number, which is 8657974571. You can also email us your queries on themoneyShow@etnow.tv. Hi Harsh, good evening. Welcome to the show. And we have our first viewer, Ravi Gupta from New Delhi, on phone line with us. Hi Ravi, good evening. How are you doing?
Hi Kavita ji, good evening. I'm doing fine. Thank you so much.
Thank you so much for sending us your query. So you want to ask about SBI Focused Equity Fund, which is not performing well. Since how long are you invested? 7 years?
Correct. I have been doing a SIP in Focused Equity Fund, but since long I'm seeing it is underperforming the benchmarks also. So I was wondering whether to continue or to probably switch to a different fund, because I feel this is some kind of a flexi cap fund itself.
Okay. Yeah, that's right. So you've been tracking the fund and there is a consistent underperformance.
Correct.
Okay. Apart from that, you have other funds in the portfolio. Anything similar to this fund?
Yes. Yeah. Apart from that, I actually have a very diversified portfolio. So I have Parag Parikh as a flexi cap fund. Along with that, I have a mid cap fund, which is the PGMI fund, and I have a small cap fund, which is Axis Small Cap Fund. So apart from that, all other funds are doing pretty well, and I've been doing systematic investment plan. But precisely for this SBI focused fund, I'm a bit confused because it has been underperforming from a very long time. So I was wondering if I switch it off or probably some other new scheme.
Sure. Got your question. All right. Harsh, clearly he's concerned about the performance, but could you please explain us what kind of a fund is SBI Focused Equity? What's the kind of portfolio they have right now?
Yeah, so Kavita, Ravi is not wrong when he has concerns on the performance of SBI Focused Fund. So SBI Focused Fund, as the word says, is a focused category fund with an investment style being that of flexi cap. So the investment mandate is that the fund manager can pick any company across the board, not restricted to large cap, mid cap, or small cap, just any company that the fund manager or the fund management team looks at, they can invest into those companies. Now, being a focused fund, they have a very concentrated portfolio of about 25 to 30 companies only, of which also certain investments is there into international equities. So, when I look at the performance part, Ravi, as I said, is not wrong when he says that I see underperformance in this scheme. And when you look at the underperformance, it is essentially on a shorter period of time, which is 1 year and 3 years. So if you compare the returns purely based on 1 year and 3 year performance, you will see that it has definitely not been outperforming the benchmark or its peers. And however, in isolation, if I look at the performance and the returns that this scheme has generated over a 3-year period, that's about a 23 kind of a percent. So 23% CAGR is not really a bad performance. 1 year has been negative, but 3 years has been about 23% CAGR. Now, if you look at 23% CAGR, it looks good. But if you look at and compared to the other flexi cap category average, or you look at the BSE 500 index, I mean, it has underperformed that. However, if you look at a longer period of time, which is even beyond 7 years, 10 years and all, I think this fund has done very well. I don't think there is any reason for you to move out of this fund right now. Every fund manager goes through its ups and downs. Every scheme goes through its ups and downs. I think we just have to stick along. The pedigree is good. I think we'll continue with this SBI Focused Equity Fund for
now. Tell me something now. What are the similar kind of funds and categories, Harsh, where we'll see underperformance?
Okay, so I'll tell you. So, as I said, SBI Focused Equity Fund is the investment mandate is that of a flexi cap. Which means that you can pick any stock across the board. You don't need to restrict yourself only to a large cap, mid cap, small cap, anything of that sort. Now, the comparison of this then would be, say, one benchmark would be to look at it as a BSE 500. That's the index that you will look at. You will look at a flexi cap category because it functions like a flexi cap fund. So Ravi also has a Parag Parikh flexi cap in his portfolio. You will see that Parag Parikh flexi cap possibly would have performed better than SBI Focus. So that is where his concerns arise. However, as I said, the fund has been in existence for a long period of time. There has been a focused strategy into this, and the pedigree is good. I don't think there is any compelling reason right now only to look at underperformance for a specific period and say that should I exit out of this. So I don't think there is any need for any panic that way. You're investing through SIP. I think you can continue more certainly on this.
Ravi, is there anything else you want to ask?
Ask one thing,
Sure.
especially to Harsh only. So Harsh, I just wanted to ask that since you mentioned that this is a focused equity fund wherein there is a restriction on the number of stocks, so will it be better if I switch to a flexi cap fund like Parag Parikh only, wherein there will be more flexibility available to the fund manager, because I'm giving a lot of amount as a expense ratio, but if I'm not getting no benchmark beating results, then there is no fun of me paying the AMC amount. That is why I'm wondering if I should switch, do a systematic transfer plan to Parag Parikh or something of that sort.
So, in fact, Ravi, your concerns are very, very, understandable. The only thing is Parag Parikh FlexiCap also has a very concise portfolio. It does not have a portfolio of about 40, 50 companies in any case. And even otherwise, 25 to 30 companies as a basket of stocks is not a bad diversification. I mean, sometimes you have to understand that if the markets were to move upward and it is not broad-based, but it is specific to the companies that, SBI Focus Fund has possibly invested into, you will see exponential growth also in that case. Looking at your portfolio where you have a Parag Parikh FlexiCap, a PGIM mid-cap, Axis small cap, etc., this is not a bad fund to have in your portfolio. So sometimes in equity, you have to have that kind of a concentrated portfolio as well for it to do well and generate that additional alpha for you. So I don't think you should have that much concern on this. Continue with it. Fund managers will have their ups and downs. They will go through market cycles themselves. The scheme by itself is good, and you should just play it out. You have another 7 years to be invested before you need the money. So I think you can continue. There's no need to panic so much on this.
All right. Thank you so much, Ravi, for sending us your query. And we move on to our next viewer, Nitin from Aurangabad. Nitin, hi, good evening. How are you doing?
Yeah, good evening. I'm good.
All right. So, you've been investing since last 2 years, and you have managed to invest, or the corpus right now is 1.5 lakhs.
Yes.
Okay. You have 3 funds.
Yes.
Okay. And you will be holding these funds or this particular portfolio for how long?
For 3 years.
For more 3 years.
Yes.
All right. Harsh, quite an aggressive selection for a medium-term outlook. Nippon India Small Cap,
Kavita,
PGI Mid Cap.
Okay, so I have a query by the name of Ragdeep on I think this is the Nippon India Small Cap that we're talking about, the PGI and Mid Cap opportunities and Parag Parikh Flexi Cap. Is that what we're talking about?
So this is Nitin's question, and okay, he wants to invest lump sum in an ELSS mutual fund. Nitin is also not saying anything when I'm cross-checking the details with him. Okay, so he wants to invest lump sum in an ELSS fund, quant tax plan. So is that choice of his right?
Okay, so what I understand from Nitin's question is that he wants to invest lump sum to save tax under ELSS, and he's already invested into or is going to select into the quant tax plan. And how much tax benefit will he get is actually what we are trying to figure out. So Nitin, ELSS schemes fall under the overall gamut of 1.5 lakhs under Section 80C. So the investments that you make for insurance premiums, PPF, etc., all that put together comes under Section 80C, which is restricted to up to 1.5 lakhs. So the 60,000 that you're investing into this will form a part of this 1.5 lakhs, and the tax impact is such that your income reduces by 60,000, the taxable income for computation of income tax. So when you go and calculate how much tax you have to pay, 60,000 rupees will be reduced out of your income, and whatever is your tax slab. So if you're in 20% tax slab or a 30% tax slab, you'll save tax to that extent on the investment that you make. And if you're going to make this investment continuously for over 3 year period, every year that you invest, you will save tax on that. So it is for the year in which you make the investment. So in this financial year, if you're investing, then you will save tax in this year. Next year, there is no compulsion to invest in it, but in case you invest, then you'll save tax in the next year. So that overall is the impact of an ELSS investment on your income tax. Now, I believe that was your question on how much tax will you save. It is not based on your tax plan.
All right. Is there anything else, Nitin, you want to ask?
Yes.
He
So
also,
is it safe
yeah.
to invest in quant tax because it's using some computer algorithm? So that's my worry.
All right. Harsh, is that something to worry or something to know if at all you are interested in investing in something like this?
Okay, so quant follows a mechanism of selecting stocks. It's basically a momentum-oriented portfolio that they create. And if you already invest in it, then there is nothing you can do because there's a 3-year lock-in in it. In case you haven't invested in it, then I would suggest that you go for another one, such as a Mirai Asset Tax Equity Tax Saver or a Canada Robeco Equity Tax Saver. Those will be better options in case you haven't already invested. If you've already invested, as I said, you cannot do anything. But in case you've not invested, then Canada Robeco or Mirai Asset Equity Tax Saver will be a better option for you.
All right, Nitin, thank you so much for sending us your query. We move on to our next viewer's question, which is Randeep. And Randeep has been investing since last 2 years. We don't have him on the phone line. Otherwise, we could have checked as to for how long he wants to be in these funds. Nippon India Small Cap, PGI Mid Cap Opportunity, and Parag Parikh Flexi Cap, he says he has right now. And he wants to know if he can stick to these funds. He also is looking for 15% return from these funds. So the selection and how long typically one should be invested in this kind of a selection.
Yes, Kavita, you rightly pointed out that we don't know what is his time horizon. So we know that he's been investing since 2 years and he's accumulated 1.5 lakhs, but we don't know how many more years he wants to stay invested. Now, and he's expecting a 15% kind of a return. So, well, Ranjit, you must understand that equity investments are essentially long-term investments, which could be at least I would say with a minimum holding period of at least 8 to 10 years. So if you invest for that time horizon, there's a great possibility that equity generates a return between 12 to 15%. So the estimate that you have that you want a 15% kind of a return, that will come only if you stay invested for longer period of time, then the possibilities go up. In the short term, there is a great possibility that you might earn even more than 15% on an annualized basis. And there's also a possibility that you might even incur a loss on your investment. So in the short term, the return estimations could be either ways. It could be negative or it could be exponentially high depending on when you entered the market and how market performed after you entered into it. However, over a longer period of time, we see more stability and more consistency or more predictability in that sense to say that, okay, we can estimate a return between 12 to 15% because that has been the past performance that we've seen at any given point in time. Though, of course, past returns are not guaranteed in equity investment, but that kind of gives you a sense that should I expect that much? And with regards to your portfolio, I think you have a good allocation between a flexi cap, which is essentially a quasi large cap nowadays, mid cap and a small cap. All schemes independently are good, and you may certainly continue with them.
Okay. We move on to our next question, which is from Deepak, and he's been investing in mutual fund for 5 years now. He's collected 4 lakhs corpus, SBI small cap, SBI Magnum mid cap, and Quant small cap. He wants to have a total of 50 lakhs in 10 years. He wants to buy a property out of this, and he says right now he's investing 30,000. But he's also written that he can invest 30,000 a month. So I'm not sure if that's more 30,000 that he wants to put in. But so far, how is the fund selection? Very aggressive? Do you think he needs a large cap?
Yeah. So Kavita, the schemes by themselves are very good. So he's got 2 small caps. He's got 1 mid cap. And, ideally, I'm not personally in the favor of having such an aggressive portfolio with only mid and small caps in your portfolio. However, I mean, if he's taken a very conscious decision and it's out of the risk appetite that he believes he can take, and he's comfortable with taking this kind of a risk in anticipation of better returns over a period of time, then most certainly he can continue because the schemes are fine. He doesn't need to do any changes in that. However, if he's looked into, because there are many portfolios and many queries we get on shows that we do, Kavita, wherein people invest into small caps only by looking at past performance. So if you say the last 1 year, 2 years, returns have been in excess of 30-40% annualized, and that is what you look and invest into it, then there's something wrong that you've done. So if I were to suggest one change, in case he's not consciously designed this portfolio, is to change one small cap and replace one small cap with a large cap. So he'll have a large cap, mid cap, and a small cap. So I think that will be a very good allocation going further. with regards to his target, which is 50 lakhs over 10 years, with this current investment, even if he does not increase his investment by another 30,000, this existing investments will also help him accumulate 50 lakhs after 10 years. So that should not be a botheration to him.
All right, so that's from the viewers' queries section. But Harsh, we have a breaking news where we will need your take as well. The central government has hiked the rate of interest on various small savings schemes, including Senior Citizen Savings Scheme, Sukanya Samriddhi Account Scheme, Monthly Income Savings Scheme, National Savings Certificate, Kisan Vikas Patra, and all post office deposits for the April to June quarter financial year 2023-24. Now, rates have been hiked by up to 70 BPS. This is the third time in last 9 months that the centre has increased the interest rates on small savings schemes. So, was this really expected, Harsh?
Yes, kind of yes, Kavita, with a simple reason because interest rates all across the board are going up, and if there is to maintain attractiveness of investing into fixed income, fixed deposit kind of schemes and small savings schemes, you need to bring it at par with your interest rates which are offered in the market. Now, if I look at one of the highlights is going to be the Senior Citizen Savings Scheme. I was just looking at those rates which have been announced now. So, Senior Citizen Savings Scheme has moved from 8% to 8.2%. And the limit, the maximum amount that an investment can invest, that an investor can put into this scheme has been increased from 15 lakhs to 30 lakhs. So I think it's an excellent product for people who are retired, who are 60 and above, who wish to secure fixed interest every quarter. I think this is one such investment. So Sukanya Samriddhi has also become an 8%, which is again a very, very good interest that we're looking at. So yes, it was very much in line and expected. And I think it's a good time for all those people complaining that interest income was falling, interest rates are down, how do retired people earn? I think it's an excellent opportunity to invest into small savings schemes now.
All right, so that will be all. Thank you so much, Harsh, for being on the show and helping our viewers with their financial portfolio. On that note, it's a sign off from me also, but then I'm going to leave you with our WhatsApp number and our email ID where we keep waiting for your questions. Thank you so much for watching. Goodbye.